Hello everyone, George DeSantis here with the look at the market for the week ending Friday, November 15th, 2019. I haven't done one of these in a few weeks, so we'll do it this week. And for those who are new, basically what I do is review the general market using the S&P 500 to do so, and then take a look at some individual stocks. Try to keep it simple too. Um, Before we begin to look at charts and stocks, etc., let's take a look at the disclaimer. You know, it simply instructs you that I'm not a professional investment advisor, and I do this for my own purposes, my own edification, and for those who care to take a look. So let's begin by looking at a weekly chart of the S&P 500, as we usually do. So we'll begin with a weekly chart as we usually do. This is the S&P 500. And here we have some moving averages. I usually like to take a look at these first. The 4 exponential moving average, the 9 exponential moving average, and the 30 weighted moving average. There are these other lines, dotted lines, are Bollinger Bands with 1 standard deviation, 2 standard deviations, and 3 standard deviations. So, if you're not familiar with this, there's lots of stuff on the internet you could read on standard deviations. It's a measure of variability, or some people might say volatility. So right now we have the 4 above the 9, 9 above 30, and that's indicating that we have an uptrend. We have a green bar here, meaning that the market opened lower than it closed. It closed higher than it opened, in other words. And what we can see is the body of this candle or bar totally engulfs the body of this candle here the week before. And so that's a bullish engulfing candle. And as the term suggests, we might expect then higher prices to come. I'm going to give a bullish scenario first, and then I'll see what cautions we might employ, what cautions we might pay attention to. So this is a bullish scenario. Another bullish indication is the fact that the parabolic, these white dots, continue to remain below the most recent bars. And this really, the parabolic really instructs us when to change our thinking from being bullish to bearish or vice versa. When price bars are above the parabolic, we should be bullish. In other words, we have an uptrend going on. And when the parabolic's above the price bars, we should exercise some caution. And it indicates maybe a downtrend is starting. Sometimes the downtrend is a little longer than it was here, for example. What we can notice here too is that price bar seems to be riding this 2 standard deviation upper Bollinger Band. It may be the case that we are, well, in some sense, we are overbought by this measure anyway. We seem to be overbought. But it could very well be too that we are riding up this band, and we can do that for a little while longer. And one of the basic rules in technical analysis is that, or things to understand, is that in an uptrending market, as we've had for a little while now, for quite a while in fact, we can remain overbought for much longer. So the next thing we can look at is MACD. MACD is now above the zero line, and it's trending up from above the zero line. Williams percentile with a 30 period continues to remain above this magenta line, which is minus 50. And in fact, it's above minus 40 now, I think it is. So that indicates we're still in an uptrend. And RSI 12, because it's a weekly chart, also indicating that we're in an uptrend. Now, what can go wrong? Where can we falter? What should we be cautioned about? Fact is that we might see a minor pullback here because prices are bumping up against these upper Bollinger Bands. Certainly, if it gets to 3 standard deviations, there is even more need to be cautious. But right now, it looks as though we are riding the upper Bollinger Band. Here's a daily chart now of the S&P 500. Similarly, as we did with the weekly chart, we take a look at the moving averages first. And the yellow line, 4 exponential moving average, is above the 9, the red line. That's above the 30 weighted moving average. So we have an uptrend on the daily chart as well, as we would expect. If the weekly chart is trending up, usually, the daily chart will be doing the same. This has been the case since early October, when the 4 crossed over the 9 here, and it's remained there ever since. So the other indicators we have here are that the parabolic switched to an uptrend here, back here on October 7th, October 7th, and the parabolic remained below the bars all the way up ever since, and it's still there. So there is no signal then, or there was no signal from this time, from October 7th all the way to the present time, to reverse this uptrend. Parabolic, SAR, indicates, it stands for parabolic stop and reverse. And there was no need to stop and reverse since October 7th. Now you can see that on Friday we had a nice move. I think the Dow went up about 222 points, and apparently we were up to about 23 points here on the S&P. We aren't quite at the 2 standard deviation line on the daily chart, so we might have a little ways to run here. We should. When we look at MACD, to move down here now, when we look at MACD, you can see that we are still above the zero line, which is bullish territory. So we're in bullish territory, and even though there's a bit of a fluctuation of the height of the histogram here, that's not significant. It's only significant if we get a cross below the zero line, or for that matter, a bearish divergence of MACD from price. Now, Williams percentile crossed above that magenta line since back here, again around October, what would that be, October 11. So just soon after the 4 crossed above the 9 here, Williams crossed above the -50 level. So that it was also supporting the interpretation of an uptrend. And we can see that RSI 12, even though it's not as effective on the daily chart as it is on the weekly chart in calling the trend, it's still indicating an uptrend since about the same period here. We turn to some stock charts, and what we have here is the spread between the number of stocks making new highs and those making new lows. And you can see that it became overextended here, pulled back quite a bit, but it remained above that zero line. So it seems as though we're in pretty good shape here insofar as the number of stocks making new highs versus new lows. Here's a chart showing what is called the impulse indicator. 3 different colors on the bars: red, blue, and green. And for those who knew, when the bar is colored red, painted, as they say, painted red, it's a censoring system, according to my friend Alex Elder. So it says, look, you're not allowed to go long if it's red. If it's blue, you could go long or short. You could be buying or selling the market. And likewise, when you have a green bar, you're not allowed to go short. You should either hold or go long. Right now, we have a green bar. You can see this green bar here on the daily chart on Friday, right? So we are bullish in that sense. And here's our chart on the S&P that, well, it's actually on the, it shows the number of stocks, the percentage of stocks of the S&P 100 above their 200-day moving average. And you can see right now it remains pretty high at 78. So that's pretty bullish too. Here's the best choice chart of the S&P, really the spider, which is an ETF of the S&P, of course. And you can see now, according to this chart, we are overbought. We're at the 90% extreme line. This is a chart that shows us the regression channel. And so we are overbought according to this indicator here. But when we look at shaken, you're going to see that shaken is indicating that the market is somewhat more oversold. So you have some conflicting indications here. It's because they're using different criteria, a few different criteria. We'll do that in a while. And here's a chart of the SPIDER, or the S&P ETF, on Shaken Analytics. And you can see that it was overbought here, and then it became quite oversold. Now it's ticking up, which means that we should go higher from here. What happens is the discrepancy that we're seeing here between best choice chart and this chart, in my opinion, is that on Shaken, they're using the Wyckoff method for calling tops and bottoms. And whereas with the best choice chart, they're simply doing regression analysis on the price. If that's a little confusing, sorry, that's what it is. So now we can look at some individual stocks on Shaken. We have a few minutes left, and I'll try to move along pretty quickly here. This is a list of stocks I either owned or hope to own or don't own anymore, etc. So you can see what they look like right now. I own Microsoft. I don't own these two. Microsoft is overbought according to this chart, overbought, but I still have it, and I have some covered calls on it. XLK, the technology ETF, you can see it's overbought, but it can remain overbought for a while. IHI is one which I want to buy, but I never did. It's a medical healthcare stock. It's a medical, I think it's a list of stocks that manufacture medical appliances. Now, I do own Royal Bank of Canada, and so this one was oversold, and now it's a bit overbought. Let's see what else. iPay, I still own it. It pulled back quite a bit, but recently it's been trending up again because Visa, MasterCard, these stocks have been trending up again. Let's hope it continues to do so. We can see, take a look at MasterCard. You can see a similar kind of chart. Southern Utilities, the Southern Company with Utilities. I like this chart. I like the fact that there's very little volatility, and I do own it. Target I own, and it went into a little bit of a trading range, but now was overbought. Now it's becoming oversold a little. But I do have it, and I do have some covered calls on it. Apple, I still own quite a bit, biggest holding I have. And yes, it is overbought, but again, it can remain overbought for a while. Instead of buying the SPX or the QQQs, I bought the SPXL. It's leveraged 3 times, so I have a nice gain, but you got to be really careful with these triple leveraged ETFs, and I am. I watch it like a hawk. Here's the QQQ, triple leveraged QQQ, and that one I don't own, but it's moving just similar to the XPXL. Now, in case you're interested, this is how Shaken evaluates the SPIDER ETFs, and you can stop the video if you wish and make a list. You have the financials, technology, healthcare, etc. Metals, and then you have the communications and industrials. These are the ones that are rated more highly. So folks, that's all we have for now, and good trading. I hope you have a good week. I am actually feeling a lot better after recovering from that stupid fall that I took. But we'll try and do this again next week, God willing. Bye-bye.